But the thing that always strikes me is, somebody who's been in business for 45 years and relatively good at what I do, why are you guys not looking at venture capital? Why are you looking at bricks and mortar lending as opposed to venture capital into the business?
I think it's knowledge of people in that. It's access to the contacts and building up the knowledge and expertise in that area to attract venture capitalists. Certainly not averse to it. It's just, I suppose, early in the journey and building up that experience so that, we're in a position that we can attract that type of funding.
I just find this interesting. It's maybe a topic. Tell me if we're going off topic, Emma, and I'll shut up. But it's interesting because I work as a business consultant, and one of the businesses I'm working with at the moment isn't property related. In fact, it's got less security than property related, but it is leisure related. And we're talking to 4 venture capitalists at the moment, and we're arguing about the amount of the business we want to give them, and we're arguing about the amount of money that we want to give them. But we're not finding it difficult to find venture capitalists to get involved in the leisure industry because the leisure industry is growing. I mean, it's been growing. I could bore you with statistics about the leisure industry, of which apart hotels are part of. And what I find interesting about, I'm going to use this phrase and don't take it the wrong way, use guys, right, is you only ever think about bricks and mortar borrowing, and you don't think. And actually, having built a reasonable sized business, and I talk about this quite a lot, and we're rapidly ignored, but it's quite interesting. I didn't bring venture capital in our business in the early days because I needed their money. What I needed was their expertise. What I needed was somebody who was going to take a £40,000 business and turn it into a £5 million or £10 million business. Mm-hmm. And he's just it's almost ignored by the property world, venture capital. And I don't understand why. And when you look at where you guys particularly operate, which is a sector of property that's really leisure industry, I have no idea why you're still trying to borrow out property to property. It just it seems naive.
I think for me, so the apart hotel will be my first venture into this kind of type. I've absolutely got ambitions to grow that from 1 to 20, and so I know that doing what we're doing just now, going from bank to bank, isn't going to take us to that 10 million. So I'm absolutely open to kind of looking at different ways of funding that. And I guess it's a knowledge gap, isn't it? And, it's looking to people with your experience to kind of understand how you present yourself to attract venture capitalists going forward.
Yeah, absolutely. And I have to say, going on to a previous conversation we've had together, Paul, about the creating your business plan and things like that. So I am working through your book at the moment. Slowly but surely as I get time in between other tasks. I find it quite inspiring, the idea of approaching the venture capitalists. It's something that down the line I'd certainly hope to proceed with. But at the moment, I think it's more about building that business plan, making sure you've got the research in there, the market research, knowing your client base fully and strongly, so that when you can, you've got your plan put together and in detail, then you can actually approach them, and you have all that information there. But then it's the next step of how do you approach the venture capitalists? Where do you find them? Something that I'm not strictly familiar with myself. So once I've gone through your book fully, maybe I'll approach you.
It's a little bit of work, isn't it, Hamish? It makes you think. It's a thinking book, right? It's a grown-up thinking book. Although Margaret Ann did write it in a way that I think it's very accessible. Because it's not the way we speak to each other. So we made it very accessible. I think people. It's quite interesting, when you look at venture capital and you look at venture capital in the IT world, right? And in the IT world, we have this thing called runway money, right? Which is, and we're looking at runway money for these guys as well as a consultant. And I think the other perception that people have in property is, well, I have to prove myself first, so I have to build the first one and prove myself, right?
Yeah.
You know, and if you take that into the IT world, right, and how many IT concepts that we are using, like the one that we are using right now that had millions and millions of dollars thrown into it, and do you know how much profit this makes at the moment? This Clubhouse thing that we're on, do you know how much profit it makes? Absolutely not.
Zero. Yeah.
Right. And you guys think that you have to proof of concept. This leisure company that I'm working with have got, let me think, absolutely nothing.
Mm-hmm.
And I can't, obviously, they're a client and I can't share too much detail as you would understand, right? But let me say that we've been offered a substantial 7 figures to kick this business off from a concept, Hamish.
Yeah. Well, it's interesting though. I mean, like, I think the idea of 7 figures would probably, you know, if I put together a concept, 7 figures, I would be quite nervous taking that forward. If someone said, all right, here's you know, 10 million, take it forward, I'd be quite nervous about my ability to manage a project so big.
I wouldn't.
No, neither would I. Why would you manage it, Hamish? You would bring someone in to manage it.
Yeah, I mean, for me, it's interesting what you say there, Paul, is that I kind of very much felt that it was the chicken and egg approach. I didn't have enough experience to go and tout for that. And certainly when looking at exits, initially, very early on, we were looking at sort of exiting through pensions, but because ours are self-contained units, it doesn't work. So then we've been looking at sort of REITs. So I've been looking at it from the other end. And I think you're absolutely right, looking at it from this end, because certainly our model and in our local area, you know, there's masses of demand, and certainly I think the whole leisure industry is incredibly exciting. You know, the number of people that are falling in that you know, middle class kind of area that have got more funds to be able to go and do you know, sort of the leisure activities that used to just be for the more wealthier or the more wealthy. So yeah, so I suppose for me it was very much, yeah, I sat in the chicken and egg space, and I suppose I came from a position where I wasn't thinking big enough, maybe. But that's very, very kind of inspiring, so to speak.
Well, venture capitalists are very interested in leisure at the moment because, you know, venture capitalists tend to be, because they've got millions of pounds to spend, tend to be relatively smart people in my experience. I've never met a dumb venture capitalist yet, right? I'm moving to being a venture capitalist when we sell off our portfolio, and I think I'm going to be the dumbest venture capitalist I've ever met.
No, you're not.
And they're usually relatively smart people, right? And they're looking heavily at the leisure industry because they realise that the next generation, if you like, the kind of, you know, the 40s and unders really value their spare time. And they're maybe not as worried about having a big house anymore or having a big car as they are of actually spending quality time. So they're saying, yeah, I don't need the like people from my generation, because I'm old, but people from my generation wanted the big house and wanted the big car. And actually, when you talk to the under 40s, they see that as something they will do sometime, but right now they want to live.
But I suppose it is, isn't it? To me, it's very much kind of, you know, a gap in knowledge, not understanding how to broach those. I know for many years now, I have you know, an ideal investor, and that ideal investor is somebody who's you know, who's had maybe some successful businesses, who generally has a very broad portfolio of, you know, properties, you know, maybe stocks and shares. They've you know, built up businesses. They either may still own it, but they're not really part of it, or they've sold it. So they're very experienced people, wanting to kind of have a bit of a, you know, a time of helping others, obviously maximize, you know, their return. But I'd never really thought of it from the venture capitalist point, where it, you know, it could be you know, a no money return for a long time. That was just not the sort of model that I felt that I wanted to be in. I wanted to be in a model not like Clubhouse. I didn't want to be in a Clubhouse model where there is a certain amount of hope in there. I wanted to be in a model where it came from a position of certainty. And in fact, that goes back to the point that Ingrid made, you know, not rely, you know, if you're not getting the right returns on a buy to let, then moving it to SA, that's not a model I would choose. To me, your backstop always has to be that it would work as a buy to let, no matter the sort of mortgage rates that we're getting to. So I suppose I was thinking of it from a it has to work perspective, whereas with a VC, it's more, you know, absolutely you're going to do a lot of work and effort, but they don't always work, do they?